Hi guys. So yesterday the markets corrected a little bit, but actually tech stocks didn't even go down. But the general market corrected a little bit yesterday. This is from today already, even though the market is not open. But yesterday it went down maybe 2% on Monday, the S&P. But yeah, I think the work of let me show it to you. I think there's too much bullishness. I think we will have to. I think it's a good chance the market corrects more, and so we get a little shakeout. And this is the opportunity I want to take to um, invest my shorts proceeds because I continue to increase my shorts, and it was minus 30% for gold, and it's now minus 20. Yesterday I sold some at market to raise it from minus 13 to minus 20 because I think this trade may be slipping away here. If the general market, the stock market corrects, I think gold is likely to correct also. But then I think the stock market will bounce strong, whereas gold not, because the fun is the fun is over for gold because the fear is fading away of the corona crisis. So I think this might be lost opportunity. And before I said I will only do 25% Cali, but actually I canceled that. I am back at 50% Cali, half Cali for this short gold. And because yeah, I think it is a great opportunity, and if I do 50%, that would be a recommendation of 38% exposure. Let's say I take 30% exposure, minus 30. I think yeah, um, cannot be too little. Also, I'm at minus 20, and if you see a great opportunity, you have to go for it. Also, huh? That's very important if you want to have returns, that you make it count. And so under investing, yes, it's safer. Yes, you risk losing less, but you also risk. I have a you also will make less. And it's not like great opportunities present themselves every Monday or every month even, because opportunities are dependent on your own insights, and they are not unlimited. Like you can only follow so much, you only have so much knowledge, and so real opportunities, you know how much they present to yourself, and when you have that feeling like wow, this is really, wow, this is a great opportunity once a year, once every 3 years, huh? You have to really embrace that also and not underinvest when that happens, huh? And take a rational approach, which is following the Kelly criterion, huh? And so okay, never overinvest, but also don't underinvest. um, so that's why I'm starting to push this up more aggressively towards hopefully minus 30%. I prefer to sell on the way up, and I prefer to buy on the way down. But when the trend changes before your orders get filled, I think it's important to start chasing also when you think it might be your last chance. So that's what I started doing with shorting gold, and also expanded to another ETF, gold ETF, that I have also minus 2%. I started shorting silver, but I canceled that, so I just keep my existing position. I'm not going to add to that. But I'm going to focus on shorting gold because silver and gold is a different market. There's more risk shorting silver because, let's say, it's easy to buy up all the silver, all this bullion silver. There's very low amount of bullion silver available, so it's very easy to buy that with a few billion dollars. You get all the silver, but then there's a temporary shortage that can really pump price on the futures market. And even when the price pumps, it's not like silver producers will start producing a lot more, because silver is too cheap to even produce on its own, to mine on its own. It's too cheap. It's not worth it to open a mine for that. So the way silver is mined is by as a byproduct from general metals mining, copper and so they end up mining the silver also, and that's what's being mined. So even if prices explode, that doesn't mean production explodes, and that's really very important that production explodes if you're short silver, that you get a glut of supply when the price explodes. Otherwise, you're in big trouble. So that's too risky. But gold, when gold goes up in price, immediately you get more production from all the gold miners. That it is worthwhile to just focus on mining gold, even as an amateur. You can make money with it. So production goes up a lot the moment price goes up. So that's why I think shorting gold is a lot safer. Also, I didn't study the situation on silver. I only studied it on gold, where I am convinced that it's a long-term bear market because we haven't seen a drop in supply due to low prices. We saw a stagnation in the amount of production of gold, but that's due to the corona crisis. Forced shutdowns, they don't count. Huh? That does not count. The only thing that counts is a lower production due to too low of a gold price, and that's not the case. That, in combination with the duration of the cycle, convinces me strongly that we are in a long-term bear market of gold. And I think it's a tremendous opportunity because if you fill in the odds, Kelly recommends like 70% exposure, half Kelly 40%, but that's not even taking into account what you can do with the proceeds of that short. Of course, you don't keep that in US dollars. You can invest that in great other investments. But I also discovered, I shared before, like I can't. When you apply the Kelly criterion, the recommended Kelly allocation, you have to do that not over your total amount of funds available. You have to do that over your net worth, and that means that even though I have more cash available here, by shorting 20% gold, my cash position has gone up from 30 to 50%. Before it was 30%, now it's 50%, thanks to the proceeds of selling GLD fund shares. But that doesn't mean that I can actually invest more in crypto, for example, than before. No, because the recommended Kelly allocation when we reach lower crypto prices is 55%. That stays exactly the same, but that's 55% over my net worth, not over the amount of money I have available. So that means that I have to go look for more investments. And I also decided not to add to oil tankers, even if they crash with 20%. And my allocation goes down to say 27%. I will keep it at 27% because I invested more enough in oil tankers. I don't need to add more to that position. And I've been wrong in my timing with oil tankers. Been investing in this half year almost now and have negative returns. I don't like that. I don't like to be wrong in my timing. It is the most difficult thing to get your timing right, especially as a value investor. But it is very important to do so because otherwise it's all missed opportunity. So I'll just eat that mistake by just holding it, but I'm not going to add to my position. Actually, like I realized, oil tankers. I was just wrong in my timing. You should not invest in tankers when shipping rates are high. It's a crucial mistake because it will always reflect in the stock prices. And I thought, yeah, but it's not reflected in the stock price. Look, shipping rates are high. Half a year ago, these guys make tons of money, yet the stock prices are at an all-time low. So I thought that the market was wrong, but it's not true. The market did value the stocks higher due to those high shipping rates because now shipping rates have collapsed and the stock price has also gone down. I lost maybe 30% on that position or so. And yeah, so I think it may be another 1 or 2 years before that bull market starts, and that's of course a lot of loss in opportunity cost. So I'm not going to add to that my position. That means that I really need new investments, and so that's what I've been looking for. Before I said I'm going to focus on nuclear and emerging markets, but nuclear, yeah, I made videos about that in the past. It's the same story as with gold. There has not been a production collapse of uranium yet, due to low prices. There is one player in Kazakhstan that has a lot of the market share of the production of uranium and has been lowering production, and this has impacted overall production. But I haven't studied the latest numbers. Is it actually going down now or is it just sideways? It doesn't really matter because this player is not shutting down production because uranium prices are too cheap. No, they are shutting down production because they want to make more profits. But that does not count also um, because it's not a limited supply, and that's the idea. They're just, these producers are wrong. They act like uranium is a limited supply commodity, and therefore we should optimize the returns, and therefore, since we have such a big market share, we should shut down some of these mines, produce less, and that way manipulate the price higher and create an artificial shortage, and thereby making more profits. That will not work because there will just be other, once the price goes up, there will be other producers taking their market share, and after some time they will say, damn, we're losing market share, okay, let's open the mines again. um, so that's how it goes, and therefore, so I kicked that out. The plan to go invest in nuclear and uranium. I think actually that, yes, it's really undervalued, nuclear energy. But what's most needed there is not. There is no shortage of uranium. What's needed there is innovations. Like they are ready. They are right there. You can build nuclear power plants that actually burn the nuclear waste that's been built up over time. Bill Gates has been busy with such projects. These kind of investments need to happen. But the problem there is then, like, yeah, these are very capital intensive investments, and just way too small of a place to be active in that. So nuclear is not, even though it is very important to invest in it, it's just not for me. And it's not uranium, it's actually nuclear power you need to invest in, not uranium, the commodity, huh? Or not in uranium producers, no. Huh? Um, so that's out. And then emerging markets, the problem there is I found some good links from John Polomy, but he invests in Uzbekistan stock market, but it's via a fund, private fund. It's hard to access. I don't want to open more accounts, so that's just more difficult to reach. So I've been adding some other place. At the time, half a year ago, when I was thinking of investing in cruise lines and airlines, I decided not to do and invest in tankers. That was actually a mistake. I made a loss of 20%. I would have made a profit of 20% if I invested it, instead in, or 50% even, no, 20, in cruise lines like, for example, CCL Carnival. Um, well, it was 12 when I was looking at it half a year ago. It's now 14. This is, I think, one of those stocks where you can say, okay, heavily impacted by the Corona crisis, but a good business before that, and at historical lows. Huh? It's not. It's like 20-30 year low. Huh? The last time this price was seen is in 2000. It's a 20-year low. I know, also in 2008, but it's lower than 2008 even. So yeah, I think that's one of those things that in 1 to 2 years, when the Corona crisis is long gone, that you can look back and say, like, damn, like some of these stocks, they were really an opportunity. I think one of them is this one. Like, you'll never see that price again over the next our lifetime, huh? Likely, huh? Because it's very unlikely ever have such a big crisis again for cruise lines, where half a year all their ships are down, no income. And this is one of those stocks that actually needs your capital. Huh? They need to see the value of their stock go up in order to raise capital to survive. Huh? So they really need your capital. So I think interesting investment, planning 8% exposure there. And then I have some growth stocks that have been lagging, like Twitter and Baidu. Twitter, Baidu is the Google from China, the search engine. So you look at this 10 years, it's the same price as 10 years ago, China in the meantime, and that search engine likely grew a lot. I haven't done any in-depth research, but I noticed that Renaissance Technologies, the hedge fund from Jim Simon, is investing also in Baidu, which is of course a very bullish signal because it's the fund that has the highest performance in recorded in history of an average of 60% over 20, 30 years or so. These guys are the best investors in the world. And if they invest in stuff, that should be noted. So I also like, in general, lagging Twitter here lower as 6 years ago when it IPO'd. But Twitter, I think, yeah, maybe one of those lagging stocks that, yes, big tech has pumped, but Twitter not really. Yeah? And Baidu also not. Huh? So they may actually be just next. And I like about that is timing. Huh? I don't like to invest in things way too early. This might be actually the right time. This might pump over the next half year. So I like that. RG, well, the genomic biology innovation sector is of course not my cup of tea, but I like managed funds that are managed well, and ARK Invest certainly manages their funds very well. And I like uncorrelated, diversified investments that have a potential to 10x. This sector can do that, and I also like sectors that really need your capital, which is the case also with this one. I mean, they have the potential to cure diseases like thanks to DNA editing, genomic editing of your DNA, to really cure disease instead of treat them, and that has just tremendous potential. And also what I like is that the leader that I didn't believe in, Illumina, has fallen from its throne now, and they all recognized it and has lost value because of too slow of a growth. Indeed, that I also detected half a year ago when I considered investing in this. This is now priced in, so I think interesting fund. Um, it has gone up. That's the bad thing about it, huh? In contrast to all these other plan shares have barely gone up. RG has gone up, but not as much as their other funds, of course. But it did double this year. I mean, I'm not too excited about it. So it's also only a entry position of 5%. It's not a big position, but yeah, to dip the toes in, I think maybe worthwhile. So yeah, that's my plan, and I plan to do this very very soon. Like the market only needs to correct a little bit to take in that 20% exposure, because I'm shorting gold, but I like and longing stocks, and that's a good trade. But you do have to long the stocks then. If you don't long the stocks and you just keep the US dollar proceeds, that's a much poorer trade because yes, inflation can become rampant. They did print lots of money that can show. I think it won't show in gold, but it could. It could. I think it will show in stocks, not in gold, but it could also show in gold. In that case, my short gold will be a loss maker. But if I have invested proceeds in long stocks, they will likely go up more than gold, very likely. So then I'm fine. But that means I cannot be like waiting here for the ultimate correction before I invest. I need to invest actually urgently, that 20% proceeds. So that's my plan here, to invest that on a minor correction. hopefully that continues. We start to correct about 10% from the highs of the S&P 500, but I hope we do it a little bit more to get that bearish sentiment again in the market. Yeah, I really need to have at least 20% stock exposure. I will still be left with 30% cash, which is a big position. Even when crypto corrects a lot. I don't have a solution for that yet. That also needs to be invested, but I don't know in what yet. I could change my mind and invest in oil tankers, but I would rather prefer to find other investments. But it can't be crypto. Mm, yeah, so probably need to just find some more investments. But this is the short-term plan here to try to go from minus 20% on a small bump in gold price to minus 30%. On a small further drop, go from only 2% to 20% stock exposure. And crypto has started correcting, but it needs to correct a lot more before we would reach that minus 6% undervaluation to the logarithmic regression trend line. We're not there at all. We are at 220 for Bitcoin Cash, around 150, or Ethereum 250. I would invest considerably more than in crypto, but we're not even close to that. Thanks for watching.